Welcome everybody, and we're going to start by looking at the S&P 500 today. Look at a daily chart, another strong session, the third consecutive high in the market. We've got our eyes really on this pivot high around 1945. That really is the key line in the sand. We'll need to see a break of that to have a confirmed reversal. You'll see this is a classic double bottom formation we've got here. We've got green volume coming in. The last two sessions, that'll turn green again once market opens tonight. And we see the heat map change to a dark color. So what that means is we have moved back into congestion on the trend. And of course, key at this stage is that we wait for confirmation of a break of perhaps 1950. That should see us subsequently up to around 2000. We'll see the last of the short covering disappear. That'll help rally the market upwards towards that key line in the sand. So that break and hold of 1900 in the last session was pretty crucial in terms of continuing the momentum we've seen over the last 2 or 3 days. In terms of opportunities, looking at the futures with about 2 hours to go until market open, they are positive. They've crept up, particularly over the last 3 hours or so since European Open, and are about 0.5% higher as we speak, which takes it pretty close to that 1940 level on the S&P 500. In terms of opportunities, well, look, it makes sense to be patient. Long trades appear to be the way to go. One that's caught our eye as really a classic, keep it on your radar stock is JPM. We see here that we've had green volume come in on all 3 time frames. Remember, volume's the leading indicator. We're still in congestion on the daily chart, but we need to break this pivot high, not unlike the index, of just around $60 for us to consider entry. Obviously, on that move, probably around about 60.50 if it does it next session, we should see that trend change to green. We're not quite there on the 2-day. Again, we'd need to see a break of $60 for that to change, but we have got the buying volume in. A break of $60 will probably see that heat map change to a dark color, maybe a couple of days before we get up into congestion with that, but it's well worth checking that out tomorrow. And of course, we've got the downtrend starting to decrease in severity. We've had green volume in for the last 4 weeks and are likely to see similar. So JPM very much on the radar, but also is not likely to turn to a buy signal unless we see that break of 1945 on the S&P 500. If so, in terms of strategy, well, for those who are feeling relatively aggressive, a lower position bought call while the market is still fragile, perhaps even as high as $65, make the option cheap. That'll increase value quite quickly. We should see a challenge of 63 relatively quickly if we get a move over 60.50. And that would be our potential trade for this. For those of you who want to adopt a more conservative and longer term stance, we could look to put a longer term spread in place, perhaps even 62.50, 65, out as far as May or June. Again, that would be your particular preference depending on your view of the markets going forward. There is some important data out before market opens, so keep an eye on that and how that affects the futures. And I trust that's been interesting for today. Bye-bye for now.